Here we go. On time.
On time this week. Actually, I think we're early.
Yeah. Look at us go. I got my office all set up.
Yeah, looking good. AI camera. Got some good topics.
I know.
Interesting points
Um,
this week. And I think we're ready to rock and roll. Hopefully, some people get in here. If somebody's in here right or not in here right now, but you're watching this later, we are one subscriber away from our 200th subscriber. So click that subscribe button. We do this every Monday, and then we post shorts and Instagram Reels and TikTok. So you can follow us on all platforms. But if we want to roll right into the topics, we can update your current view on the markets, George, and your call that you made, I believe, right before this market started kind of nosediving down a bit. So if we want to update the people on that and what you're
yeah,
seeing.
8-2. And it was interesting. We actually saw, like we talked about in the newsletter yesterday, on 7/31, that's when we first saw QQQ net option sentiment take a nosedive. And it's actually pretty cool graphically. You can see that it's fully below the price line on like the graph scale. And then it just finally crossed back over at the end of last week after it was down QQQ was down 8% in 3 weeks. So that is a pretty powerful statement on, essentially what we saw was like a gap being filled as if it was like a macro factor or something like that. Net option sentiment was just way out in front and pretty much doing exactly what it was designed to do, to say where the bets were happening before the price action actually came in as the result. And yeah, I kind of focused more on the macro this week, but last week I did these graphs where like I even saw like all of these like little dips, both for SPY and QQQ, were led by option sentiment going down. So it's awesome when we get that kind of clarity on that signal. And obviously, it was something that I sounded the alarm on in the middle of the week. It became pretty obvious to me. But it's like, even in looking back, it's something that like, and we use this example with like Tesla. I actually was able to, I was actually able to uh, get in, but I had kind of shrugged aside when I got in the second time, a user that came to me and was like, "Oh, like Tesla, something interesting's happening with Tesla." And I actually was like, "Oh, like Tesla runs high. Like, don't worry." I was happy with like Amazon and Meta, and I was doing a very limited number of longs and shorts in the newsletter. I've expanded that a little bit since. Um, but yeah, it was definitely interesting to see that some of these is, I was out ahead, and the signals were out ahead of most people. And it's like funny because I was at like 9:30 that day, and then Prospero was at like 9:36. And then what was it? It was not like tip ranks, it was another um one of the pretty big up and coming things. I don't know what they're called. Um,
You beat
yeah.
everyone to it though, right?
What? Yeah, no, they were pretty massive. They're a pretty massive operation that we were able to. I mean, as a startup, but way farther along. I'm gonna figure it out because it's gonna bother me if I don't. Okay. Why is this not? Oh, it's not even like I'm going to Prospero and it's not showing them an order. Whatever. It's not that important. We beat someone that was funded much more significantly than us. That's the important thing, by like 2 hours. But we were out ahead. Me, the signals were out ahead of, where a lot of people were at. And that's great, to be able to have such a powerful like stock-based signal that could also signal the market so well. Like, it's working exactly how it was designed to work and better. And one of the things that I was actually pretty blown away on is, using primarily net option sentiment, we're at an 81% hit rate on our shorts in 2023, which is crazy that it's bigger than the longs as well as we've done on the longs. But yeah, and 15 of our last 16. So we're on a bit of a hot streak here. And obviously, like, some of the stuff is if you're shorting the market a lot and you have the market direction right, that can be like the biggest key always, which is why we always lead our letter off with that. But yeah, one of the things that we actually walked people through yesterday is a little bit more the process for finding the shorts, because I thought that would be pretty interesting, mostly because it was kind of out of necessity, but it brought along this very interesting view, because typically if I was going to add, I think I added 5 new shorts and 2 new longs, and there's just no way to put the pictures in Substack. You run out of space. They say you've maxed out and you're going to be clipped, and you never want to be clipped in an email. So essentially what I did was, instead of doing the traditional, like, here's one stock and analyze it, I kind of put them all on one space. And it's definitely worth reading, even if you don't read a lot of our newsletters, but I imagine most of the people that watch this are also newsletter readers. But to run through the kind of rules that I put forth, and I can add more color than I did yesterday. Net option sentiment less than 40. I typically go as high as less than 50. I won't on a short unless I really, really like it for other reasons. Go above 50. But I can't remember any time that I've done it, other than when I've been burned a few times and said, I'm never doing that again. The one that we do more is market cap less than $1 billion. We even ended up having, a few that were less than $1 billion. Rackspace is another one. I didn't even actually know that when I was writing the letter, because they used to be a bigger company than they were, which is about twice as big as one that I said was too small, which one was that? That one was NL. But part of that is I've watched NL over the last couple of weeks, because it's been in our kind of in our bear signals, and it doesn't even get enough trades on a given day for me to really like that. So that was like the added color there. But yeah, that's one that isn't as hard and fast of a rule, because depending on what the risk tolerance is, and if I have, say, one short, I don't mind going to a small cap one in a market where you're just, it's going to just be generally bullish. And then you're just like, well, if something's going to go down, it's going to be this kind of riskier investment. It could blow up in your face, but those have gone pretty well for us. Obviously, the hit rate we have this year is pretty incredible. 81% on shorts is absolutely insane. Very proud to say that our signals enable me to hit at that high of a rate. But I would say that the sector thing is something that has happened a few times to me after the fact, that I also think is super important, because I've noticed that 2 or 3 of my shorts I accidentally put in banking once. And it's important, especially if you have a smaller short portfolio, that you're really careful about that, because you never know if an industry, especially as I eliminated yesterday, I eliminated in that newsletter real estate, financials, and then healthcare. Those are the 3 that I tend to, unless I really have high conviction on a stock, I tend to avoid those. Financial services, especially this year, I would say, because it's been really up and down, and there's this looming credit crisis. So I don't even know I don't even know if there's a rational amount of optimism to put to the banking sector when there's this impending thing coming. I could easily see it crashing tomorrow, and I could say that since the beginning of the year. So that's why we don't touch those. Real estate is obviously touched by a credit crisis too. Healthcare is just a long time, especially biotech is something that, you'll get less growth. You'll get less profitability. You tend to get higher growth. But those tend to just be things that because your profitability is so low, and one news event could really swing the short completely out of control for you if they get something approved for the FDA, or on the other end, if you're long a healthcare stock, you could just miss earnings, or they could guide to something where a drug isn't as effective or it won't reach the market. There's just so much volatility, and I've learned the hard way, kind of the binary outcome of, especially healthcare, biotech. So that's kind of how I got to these list of other industries. And yes, if I have a big short portfolio like I did where I had 6, I will make sure to spread them out. I have been looking for tech though. And obviously I have XRX and RXT. I do think tech is overvalued. And the way I did my portfolio this week was very much, and kind of, we're going to touch on this later, a little later with AI, was very much to control around the risk of essentially Nvidia having another gangbusters earnings report, that kind of sends all of tech up with my general bearishness on tech. I don't want to bet the Nvidia thing, but that's why I took Oracle, because if Nvidia reports well, I imagine that will hit Oracle pretty well. They just had a big announcement about um, about essentially getting government clearance for something. Actually, a variety of things that they can then sell their products into. So that's huge for everybody, obviously. And I don't imagine that clearance is very easy to get. I imagine it took them a long time. And then people are just kind of bullish on servers, and they're moving more. They're kind of modernizing a lot more. They've always kind of had the good application business support. So yeah, I would say that we did that, and then we did PayPal, which is just something that I think has been hit way too hard. Even saying there's a credit crisis coming, I think everybody knows that, and it actually touched oversold on RSI. And I was just like, all right, I think it was up Friday. It might prove to be the wrong call, but the way I see it is, if Nvidia does really well and they do big earnings, like, I think we'll probably come up on top, owning like the excitement around Square and Oracle versus our tech shorts, which are Xerox and Rackspace, that I just don't think will be as helped by Nvidia announcing. So it's a nice, a lot of the times when I'm setting up these portfolios, especially larger, I'm actually trying to control for multiple events and do some hedging within what I'm talking about. Like, a lot of the times when I had like Tesla, Meta, Amazon, that kind of mix, I made sure to grab a tech stock too, because it was super important to me to make sure that if there was a bad week for tech, we wouldn't just be completely hammered and completely to the downside. And that's a lot of, I would say one of the things that I've really tried to do with the newsletter picks, and they've expanded a little, and kind of thinking more about how to add more picks, because that's something that's been requested. But the big thing for me is to make sure there's just like a lot of risk control measures within them. Like, one of the things that I often talk about is that what we made money on this year, what our big gainers on the long side, and I think maybe even overall, was Tesla twice, Meta, Alibaba twice, Amazon. I believe those are the biggest in the portfolio. I could be wrong, but yeah, the thing there, the key there is timing, right? It's not stocks anybody didn't know of. Obviously we got out of Tesla again before it started going down. But yeah, a lot of that is just using the Prospero signals to de-risk in that way, where it's just like, I know there's a limited downside to the stocks that I'm suggesting, especially like these large caps, Meta especially with its very high upside breakout. I had a lot of confidence, even in a bear market, that would do well. And you're just going to get way better. Like, when you can get those kind of hits on Meta and Tesla and stocks like that, why would you play around with penny stocks? When obviously those have a tremendous amount more business risk to them. And, I believe all of it, like we made 30% on like a number of 30-day, 60-day trades there. So like, it's not a bad return either for something that's way more risk control than penny stocks.
Yeah. So, speaking of like a counter move, I noticed a line in your newsletter this past week where you said like being bearish is kind of becoming trendy. And once something is expected or popular, you could always expect the market to move in an opposite direction. So, do you think that that call or that thing is just being a little bit early again on another move in the market, or are you just putting it out there for coming weeks?
Yeah, I think it's mainly to exercise caution. I mean, I'm overall bearish on the market, and like, I'd have to check, and I will, where QQQ is right now and option sentiment. But yeah, until those like come, I mean, it's at 12, it's doing a little better. But until that's in like the 20s again, at least, I'm pretty much staying bearish. But, you know, I think you bring up a really, really good point, which is that people need to like have this kind of conviction, you know, because a lot of why we have these bull traps, a lot of what I think this run is today, you know, which is you alluded to, I warned about. I just think it's trying to shake out the people buying puts. Too many people start to buy puts, you know, then you have retail making, you know, more money, and institutions don't really like that. And they kind of like to make sure that retail doesn't get too many wins, that they don't get too many, like, you know, too many good option situations. Because honestly, one of my theories is that it's kind of a big scam that people say you can't make money in short-term investments. Like, yeah, I don't really believe in technical analysis, but I see a lot of successful technical traders, and it just makes sense to me because the market and robots trade on it. So if you can learn how to do that and basically read the robot patterns and not make, like, I would say the cardinal error, which is not fixed bets. You know, basically when you start betting more and more as you get right, that's how you end up basically losing, like you're at a casino. But yeah, essentially, like, that is a major that's like a major thing that everybody's like, oh, just like invest long term, everything like that. But like, you're essentially having many, many years of institutions just like taking retail out of these attractive short-term price appreciation moments. And I'm not saying that retail should be swing trading or day trading, or that's for everyone. But what I am saying is that there's opportunity there, and people make it seem like it's impossible, but it definitely is something that is attainable if you put in the work. And I would say also understand the value aspects of it too. I think that's really essential, that you're not just trading on momentum, that you're not just trading on technicals, because I don't think that works very well. And it's like kind of what we're talking about. You end up having a big miss of something, even like a market shift, that you might have invest in all these stocks that, you know, you're making money on, and then all of a sudden the market shifts really quickly and you're not equipped for that. But yeah, I think that is definitely a really big thing, where they don't want, you know, institutions definitely don't want to make it too attractive for retail to locate these, you know, kind of attractive short-term plays. Because I mean, look at what happened with AMC and GME. Like, retail is very powerful when they get together and they share a thesis. The problem is that, you know, it kind of fizzled because they got fixated on these stocks, and I would say retail didn't understand what they did right, which is sneak up on Wall Street and come with force, like just playing the same beat over and over again. After that was, you know, pretty much the opposite of what they needed to do, and why, you know, AMC is in the toilet and everybody's still like, oh, the squeeze is coming, here it comes this time.
And once AMC went up, people got greedy and said it was going to $1 million. Like,
that was like the absolute craziest part about it. As I watched people complain about greedy hedge funds, to being like, oh, I have 10x, 20x, 100x my return in options, but like, we need 10,000, 20,000. Just like, hedge funds aren't even that greedy. Like, it's only like retail thinking they were going to like stick it to the man that was going to do that. But it's just like, and I say this all the time, the only way to stick it to the man is making money. They, like, everybody who was on Wall Street, it was like, to the GameStop, AMC people, like, they're fair. It was a real tip of the cap, like, well played. But there was no follow-up, and there was so much like energy, and there wasn't enough effort on becoming real traders. And then there were so many hucksters that came along, and that was the annoying thing, selling discords or trade alerts or like all of this stuff that's just like BS, that like obviously is not helping retail believe, which is the best thing for them to believe, which is that they should have a growth mindset. It's not easy to learn investing, but you can get better and better. And like I would say, other than the fact that none of those products actually work, and they're either like, those people either have not read Fooled by Randomness, which is a great book about how people, even professional investors, have a really hard time understanding the difference between luck and skills or patterns that they have. And invariably, like the guy that writes this book is just like, I've seen so many people fall because they think they're smart and really they've just been lucky. And I think that describes like many retail investors to a T. Because if you think about it from a game theory perspective, you have 100 retail investors, I don't know the exact numbers, but at least 10% are going to do really well in a year, 2 years, just like, mean reversion kind of stuff. 10% at least are going to do pretty poorly. I don't know the exact numbers on that, but I feel comfortable saying 10% will do at least pretty well. And
What is
those
pretty
people,
well, like beating the market?
yeah, beating the market, maybe even like up 10, 20%
Mhm.
over above the market over like a year, 2 years, 3 years. And they probably think they're really, really smart when it's much more likely a function of luck. Because the reality is what it takes. If they put in years, I would say like, unless you put in like 5 years of, I would say, learning everything, like technicals are fine, but learning fundamentals like accounting, how to read financial statements, and then trading and or investing for 5 years, I think that's the earliest you could even hope to have like a real process that works on an ongoing basis. But yeah, I think even more than the fact that those companies are selling snake oil, what bothers me maybe more than that is the fact that they tell people like, oh, it's so easy, you're going to make money, you're going to get this alert. And then when it doesn't happen, they don't finish their education because they've been lied to, or they just say it's bullshit, it's a scam. And I just see so many people on one end or the other of that, when in reality, like there's a huge middle ground, and just getting better and better and focusing on education and learning a few new things a week, reading a new financial statement, interacting with someone that knows a lot about investing, trying to learn from them, reading books, taking classes, like any of those things will get incremental growth. And unfortunately, I think to draw the parallel between like a lot of these like BS services and the meme stock craze is like all of them were just selling this idea that, oh, it's easy, investing's easy, you can make money, it's just this easy and we're going to do it. But it like literally is never that easy. And like the more anyone tells you that, the more they're probably just like teaching you in a bad way, uninformed, or just straight up taking advantage of you.
Hmm. I think that's a powerful message because, you're the CEO of a finance company who's trying to build something, and you're not like shilling people, like you're giving people the honest truth. Like it's not easy. You need to put in work, you need to put in effort and time, and it is possible though, is what you're saying. And would you say that like a growth mindset would be like if someone has a bad thing happen to them, they take it as a learning experience rather than turning away for good?
Yeah, absolutely. And I think, one of the reasons we invented the signals the way that we did is to make it a little easier to have people remember their investment thesis. You might call these like an out of the box investment thesis, and kind of what we're teaching on Discord, which is just like, okay, I like this stock because it has over 80 upside breakout, over 80 net option sentiment, and over 80 social sentiment, right? And you can go and look and see how you do on those trades, and you can track yourself. Or you can decide, say, you know what, I think it's actually social sentiment doesn't matter that much. I would rather use like profitability. And you can kind of do that, and it's a way to grade your own process. It's a way to look at your own process. And obviously, we've embedded some super powerful metrics. And that helps, obviously, especially upside breakout, downside breakout, and net option sentiment. Do a lot of heavy lifting. But at the end of the day, what I always emphasize to people is that there's a whole other level of benefit when you really get to know the metric and how it works, and how it works in relation to a given stock that you look at, a group of stocks, to really be able to level it up and situate it. Like, and I think the really good example was like Elf Beauty. When I saw that like elevated net option sentiment and upside breakout, I was like, oh wow, like I never see like a retail, like, especially like beauty stock up this high on these things. There must be something real going on. And when I looked in, there was. But like that's kind of like the perfect example of, I would say the learning experience where someone could see that and maybe say, oh, I don't really care, like whatever, it's a beauty stock, like it's probably going to go back down tomorrow. That might be a way to learn where you're just like, oh, I actually totally missed that. Like maybe I should pay more attention to these kind of like abnormalities that I look at all the time, which is just like, is a stock in the top 5 that I don't often see? Those things are really, really powerful to me. Anomaly detection, as you might call it, is a really good way to start an investment thesis. And yeah, I mean, I would also say that, so there's doing something not quite right or missing something that's, maybe an even more valuable lesson, or there's reinforcing a working pattern. That is obviously really, really good too. And that's growth as well, where you're just like, all right, this worked last time. Maybe I want to evolve it a little bit. How am I going to evolve it? Let me make this into my process. And that's what essentially everybody saw me do with the newsletter. And like, that was in front of everybody. Like for those that have been reading me the whole time, like my first 2 newsletters weren't that great. And it was kind of funny. I was using changes in upside breakout and downside breakout because I wasn't really comfortable with short-term signals. That wasn't my wheelhouse. That was like, I like to look at kind of more ingrained value that were in upside breakout and downside breakout and more heavily back tested. Obviously, net option sentiment has since been back tested and has done amazingly, even better than upside breakout. But at the time, I kind of had to struggle through using changes in upside breakout and downside breakout, see that not work very well. Where I was like, you know what, I built these short-term signals, got to use them, got to figure out how to use them. And that's what I've done for the most part, even though there was one week this year where for reasons unknown, I went back to movers in net option sentiment in upside breakout and downside breakout. And those were 2 of my worst picks of the year. Like I would be in amazing shape. Yeah, let's see if I take those out, how I would be, how this portfolio would be if I didn't have those 2. It's ELYS and PTN. Those are the ones that screwed me, and that was in the 226 letter. But like, let's take a look at just 0. Oh, it's not as much as I thought. It's only like 20% more if I take out those big losers. But yeah, I think it's just so important for people to be able to say, like, after every investment, what worked, what didn't. And like, I would say, like, the more important thing is I think everybody just assumes that they make money, it means their process was good. And that is not a good way to go about doing things. Even if you make money, it's important to say, like, what could I have done better? Did I miss anything that could have made this trade even better? I think that's super important to the growth mindset we're talking about.
And the last thing I want to hit on before we move on from kind of the newsletter and that whole update is, I don't know if we could share these charts in the live stream, but there was 2 charts you added with, there were the net option sentiment of the QQQ and the SPY. And there's bull and bear lines on the chart. And I was wondering if you could explain how you picked where to place those 2 lines on the chart. With like back testing?
I can share. I know this is not the best for talking, but yeah, so basically what I do, and I obviously adjusted them down here, so this is from last week, but it's kind of something that I eyeball, and the main thing that I'm looking at is just like the behavior of the line. And honestly, you'll see down here, I actually said, where is it on the shorts? SPY option sentiment less than 8. So I made a little custom value there based on what was interesting to me. And a lot of the times I'm just basically like looking at where these graphs are. So like SPY, I'm basically saying like, okay, this is pretty much a 0 flat line. But historically, like I probably wouldn't move it any lower than 10 because like that's a value that I know if it starts to go above, it could be bullish. but like anything less than 10 is generally bearish on SPY. And I've just seen that and I've watched it, and it kind of ties with what we were talking about before, which is just like getting to know the metrics. I know I've seen it happen enough times. Anything less than 10, you're not going to see a good, like, especially if it stays below 10, you're not going to see a good week in the market. And then QQQ is a little different in the sense that, like, obviously it has a much higher volatility than SPY. And like, we just saw a really interesting pattern here. And I have been scooting it down, and I did, you'll see, scoot it down even more. And basically the reason that I did it is it's not even like close to a line right now. So like the way I move it around when I'm just like, it's pretty simple. Like this bear line is like so far above this. Like, I don't think, like, if there was like a 10-point move up, like let's say today, which I don't think happened, I think it might have been like a 4-point move. But if there was, like, I would consider that pretty significant with it less than 10, you know? And right now, if it moved up 10 points and was at about 20, it would still be in the bear zone. And that doesn't make sense to me if the metric doubled. So some of this stuff is just being realistic about where these metrics are. And just being like, okay, what do I think would be a sign that it's breaking out of the pattern that it's been in?
Interesting. Okay, so I think that will be helpful for people if they have any questions about that. But now we're going to go out of this world. We're going to go all the way into outer space with a news story that I caught wind of this past week, where there was a Russian mission that was trying to get to the moon and unfortunately crashed. But I know my friend George is a very big fan of futurism, and I don't think we've covered too much about like the space sector, which is really starting to, there's a lot of companies that have come public in the past couple of years. Not a lot to show for it yet, but I wanted to get your thoughts on that sector.
Yeah, it's so interesting, and yes, I am very interested in futurism, which is just kind of like somewhere in between, you know, technology and science fiction, where it's just like, you know, what's very interesting is you have some great minds thinking about, like, you know, what could be there. I'd say Black Mirror is like the best pop example of what futurism is, but it's tons
Going
of
wrong.
different. What?
Futurism going wrong.
Yeah, well, I mean, a lot of futurism is dark. Very few people project humanity forward in a very peaceful way, which is, you know, why would you? It hasn't been very peaceful to this point. Why would more powerful, like, technology make people like, oh yeah, we should be more responsible with this? So, oh, and I mean, if anybody wants to like watch, like, the Unknown documentaries on Netflix are amazing, but there's one on killer robots that's truly frightening. If you want to see some real life frightening futurism that like could be out of a Black Mirror. But anyway, yeah, I mean, there's a bunch of things at play here. There's one is just like Russia is just kind of like one big rot of a country, and it's just like hilarious that they thought they were gonna. I mean, not hilarious. I don't want to say that about war. It is ridiculous that they thought that it was just going to be like, oh, like everybody's like, we're just going to win and we're going to get more territory. It's like such an old way of thinking for them when they already weren't the power that they had been. And, you know, there's just a lot of rot. Like, one of the things that's often talked about is like, and it's a legit danger, all of these like retired like nuclear missile bunkers that are just like out there in the Soviet Union that maybe like they don't even know where those things are. It's just like amazing how much that society, you know, funneled all the wealth to the top. And like, just an extension of serfdom for anyone that knows history, like, you know, Russia was largely a serf country, or like what became Russia. Novorusk was one of like the main areas there before, but like things tend to like you know, congeal more and more as history goes on, and that one congealed pretty big because they weren't big population centers. But yeah, basically, like, as a serf, you were a farmer that, you know, you were it was a little better than, like, you know, you had some rights, but you couldn't really leave. And you just kind of had to farm, and you kind of got taken care of. But it wasn't a very good life, and that was a lot of Russia's history. And they kind of moved into a more modern serfdom. But like, yeah, it's always really funny when you see this thing where they have their big revolution, and then the totalitarian regime that came from it was probably a lot worse on the people than the wasteful czarist regime, which was pretty horrendous in and of itself. Like, at least Stalin was not like a flashy guy. He was a bit quick on the kill switch. But at least he wasn't like rubbing it in everybody's faces how much money he was spending. But anyway, that's a bit of a digression. I mean, Russia's just rotting. Like, so it comes as no surprise when like something fails, and like I'm just happy it's like a trip to the moon and not like, another nuclear reactor or something, which like knock on wood could easily happen for them. And like I just hope that it's like ineptness and not like, some of the things that people talk about with Putin, where it's just like he's gonna have his back against the wall, he's gonna be worried about his legacy, and he's just gonna do crazy stuff. Like I would not put that past him. That is a legitimate fear of mine. The only thing that kind of counteracts that is the fact that I don't think I think his own country is watching him for that, as we kind of saw with this like mini revolt. So that was nice to see. But anyway, like space is going to be absolutely huge. But kind of what the most important parts of it are the fact that like space tourism, like and there's all these different aspects. Like you will be able to do like I think, what is it called, like sub-atmospheric, something like that, where there will be like faster trips that are not planes, where you're essentially being like shot into the air and landing somewhere. That's like, I guess, space travel. That will be there. That wealthy people are always trying to move faster and do the new thing, even though like I don't know, no matter how much money I have, I don't know if I'll be interested in doing that. But it's obviously huge, and you got Branson and Musk and Bezos and everybody like competing. I think they all want to have like their Mars colony or their moon base. There was a really interesting actually proposal by the government of this guy who proposed building a base on an asteroid, where like you had nanobots like mine the resources there and build it. That was super, super cool. And he said it wouldn't even be that expensive. I hope we keep pursuing things like that. That was a cool project. But yeah, it's the way things are going. And like, absolutely, I mean, I think in our lifetime, we'll see some kind of base in outer space. I don't know how many people will get there. I don't know how many, although I feel like the way it's going, there won't just be one base. There will be a Musk base, a Bezos base, and a Branson base, if not more, because I'm sure more billionaires will say that this is the rite of passage. I want a base. There's not enough wealth and houses for me on Earth anymore. I need to like go have like show off my space wealth. But yeah, there's also very interesting resources on other planets to be mined. Obviously, we might be running out of that here, but that's another aspect that could create a lot of wealth. So yeah, you have various. I think people are doing it for those monetary reasons, for the status, and of just like being able to do that and say that they did it, and maybe even go visit and come back. I mean, I don't know what transport speeds will be like, but I would say the other thing is also just like, legacy. I think a lot of these guys that have like conquered business, and I think that that's like, when I look at politics, that's always one of the things that I'm always like, well, this is part of the problem, where it's just like, I think these business people reach the pinnacle, they get to the CEO of their company, there's no more challenges left, and then they just end up needing to like wield power in politics and try to manipulate laws in their favor, because they've already like reached the peak of their success at their company. And they're competitive, and I think that's one of the main reasons we have all of this corruption. Just the next capitalist enterprise, once you've already had big exits or like started a huge company.
There's so many thoughts that popped in my mind from your whole speech, but like, so you think they're going to be mining gold in our day? And also, you said like the timeline is fuzzy, it could be in our lifetime. And I think that's so hard to predict because it feels like technology is advancing quicker and quicker and quicker. So like, and also the human lifespan, what's going to happen with that, with the studying they're doing and that thing. So I think you're right. I would agree that it will be in our lifetime, hopefully, knock on wood. But yeah.
There's there's so many interesting things, even just like thinking about like, we're talking about like mortality is like expanding the lifespan, but like, we could live forever, and like our consciousness could live in the internet, or like we could go cyborg. There's so many things that levers, you might say, that could increase our lifespan. I don't really think, that could increase it. I don't think any of that lifespan expanding stuff is going to happen in our time. I would love for that to be the case, but hopefully.
Have you seen that guy? I think he's the original founder of PayPal, or one of them. I think his name is like Brian Armstrong. I could be wrong, or it's something along those lines. But he's devoted his life to becoming like the expert on anti-aging. If anybody's interested in that stuff, you should go look him. He's produced a bunch of articles, a bunch of studies. It's really fascinating stuff. But that I was getting sidetracked with that. Mario commented Musk and Zuck should fight in zero G, which I agree. They should be the first outer space UFC fight in time. But I have a really interesting point I wanted to ask you. So we're on this topic, and all of human history has taken place on Earth, and Earth is all we know. Do you think there will ever be a day in the future where the economy of human civilization will be bigger off of Earth than on Earth?
I think it very well could be, especially if you're talking about like all of these space colonies and expanding there and potentially mining resources. We mine all the good resources on Earth, and then all of a sudden we actually need to get our resources and other even more potentially precious resources off planet. Like, yeah, I think it has to be that, right? Because we're running out here. Like there is a finite amount, and if you push history forward, it's pretty much either outer space is going to be more resources, bigger economy, traveling. Like even if you think about just like traveling to those places, like what it costs to like run the spaceships and everything. Like I'm sure a room in like the Mars colony will be like a million more times expensive than a cruise, and just as small. But yeah, we're not like, we definitely are mining the finite resources here. Like I think if we're lucky, there'll be a bigger economy in outer space. Like if we make it that far, we might not as a species make it that far. But
Hopefully,
yeah,
hopefully,
if we do, there's the outer space is going to be a bigger economy than Earth.
hopefully
Like
the
I would say
aliens that our
maybe
government
in
has
the
been
next
telling us
50
about.
years, even.
Hopefully, the aliens that our government has been coming public and telling us about are friendly, and they'll help us with our endeavor into space.
That's so weird. And you have to figure, like reading between the lines, that we shot down that alien. And I'm just like, why? Like, you idiots. Like, why would you do that? Like, this thing is traveling like interstellar. You don't know who it is. It's like such like a, like, I don't know if it was America or someone else. It's just such like a human thing where it's just like, shoot first, ask
Yeah.
questions later. It's like this thing traveled to us. It has better technology than us. You want to be its friend. You don't want to shoot it down, but it does seem like we shot it down. But honestly, like I'm guessing if it's some super intelligent, advanced like life form, they probably could recognize how limited we are and maybe even pity us.
Maybe, hopefully, for our sake. Uh,
Well, we haven't been like bombed or taken over or anything yet, and it seems like this is pretty old. So I'm guessing it's the pity thing.
yeah, unless it's just a technology that the USA or a country has created that we don't really know. It's not public information, but I don't know. All that stuff is there's no answer really. It's just all theory. Um,
In terms of interstellar travel, like we're like monkeys. We can't go that fast. We're sending robots like out to like travel space because like we haven't really even figured out how to travel fast enough that we won't like die by the time we like go to where we're going and back. Um, so yeah, like we could go on about this forever, but
yeah, I
like
was gonna say.
we're very limited, and if someone has the technology to reach us, like they definitely have the technology to, subdue us, hurt us. Like maybe not, but like they could just choose not to develop that. But they certainly have these theoretical underpinnings that they can absolutely build crazy weapons. Because just as an example, like whether you're going to use like fusion power, or like all of these other sources of power that I think we might develop in the next 100 years. Like that's one of the only ways you can do interstellar travel. And the same thing that gets you fusion could build you a pretty crazy bomb, and or like a laser that's powered. It's a huge source of energy, so you could build a lot. You could do a lot of damage with a huge source of energy, just like you could travel far.
Mm-hmm. And to spin back, this is one of the hardest things I'm finding to do with live streams is changing topics. I don't know how like people do it like efficiently to get back into the market, but we're gonna go to Jackson Hole, which Powell is speaking on Friday, and it's usually a big event from what I've seen because it's kind of like I would describe it as the Fed chairman's State of the Union address. He kind of goes over the whole economy, which he does in his meetings as it is. But what are you expecting from this Jackson Hole?
Yeah, I think I was but I originally like shrugged off. I was like, like Powell could say whatever he wants at any time. But like as I actually read more about this myself, I was like, oh, it's a boondoggle. Do you know what a boondoggle is?
Is that a switcheroo? No, I don't really know.
No, a boondoggle is kind of like when like business people get together and they're kind of just as
Oh,
interested as in partying as they
I
are in
got
like
it.
doing work. And like it's powerful people that like, want to have a good time together and swing their dicks around. Or there's more women there now, so
Good society meeting.
context
Mm.
alone. Um, and basically, yeah, like I was like looking at it, I was like, oh yeah, like I could see like he can say whatever he wants, but even just like looking at the history of it, like the Soviet, like the central bankers from the former Soviet bloc countries attended in like 1990. That was like the first major thing on this timeline. And like, yeah, totally that speaks to the boondoggle.
Are you gonna
Like
get invited, Jordan?
invite them over, have some fun in Jackson Hole. Everybody likes Jackson Hole. That's one thing that was mentioned as I was reading about it. So yeah, like I do think like bring this away from boondoggle and like where like practically I was like, oh yeah, like that would get more stuff done. You're getting more powerful people together. They're going to be able to impress more on Powell, like what they as a group want. And like Powell is not the most swayable guy. But we talk about this in relationship to Wall Street all the time, which is that like it's very like merit based, although not perfect, but probably better than a lot of places. It's very merit based. It's very ideas based. It's very results oriented. So when you get a lot of these leaders together that you might not often like, it's just possible together they can make the case in a different way, in a way that Powell might not have seen, or when Powell's talking, he's talking with some of like the knowledge and the points that other people are feeding him. So yeah, I think just like socializing those ideas, getting all those people together, like we talk about this all the time. At the end of the day, Wall Street runs the country. So yes, a lot of keeping the stock market healthy, I'm sure will be a topic of conversation there. And it's very interesting to see what happens, because as much as I'm sure he'll be impressed to prop up the stock market, there's just like a lot of these big bear factors. It just like he doesn't seem willing to cut rates, or he might go neutral. I think if we looked, I think I saw like maybe only a 20% chance of a raise. I will look at that right now. Yeah, right now about right now it is, yeah, 86% no change, 13% hike. But then the one after that is about 40% hike. So it does look like the market is expecting, like, I guess, this pause, unpause thing. But regardless, it doesn't seem like he's done. It doesn't seem like he's anywhere close to cutting rates, which, like, I remember when we were talking about, like, when the bull market could return, like, way back, like, last year, I was basically saying, like, well, they're going to have to start cutting rates before the bull market happens. And obviously things change, and we evolved our own approach, and we bet big on tech, like after I said that, because of some of the underlying dynamics I was seeing. But yeah, like I definitely think that he is going to do his best to reassure that the economy is solid. That would be my guess, because there might be some fear entering entering the market, a good reason to have fear. So my guess is he's like iffy on if there's another raise, and he's going to do his traditional, like, we'll look at the data. But I do expect him, especially around those Wall Street people, to be very reassuring that that they will adjust if there's too much harm done to the market or harm done to personal spending, with these kind of, like, with these with job loss or other economic difficulties that are as a result of these rate raises. I definitely think, like, if we see, which I'm kind of expecting, kind of a bigger decline in August or even September, I think that we might get the Fed basically saying, like, we do want to support the market. We do want to start thinking about cuts. But that's kind of a lose-lose, because by the time that happens, we'll have already taken a pretty big hit. And that's what I'd expect. Those are the two, like, either we do get, like, the soft landing, and there's not a major amount of pain, and there's a bear run, but it's not a huge bear run. But that's why I keep saying that I expect Powell to be reassuring, because he's got to make sure there's not too much fear entering the market, because, like we've talked about, a lot of that stuff is intertwined. If fear makes people exit their positions, more people are shorting the market as retail exits, you get a bigger decline. Then all of a sudden, you also have less money from everyday people who might be dependent on their savings stocks, or their retirement funds or what have you. So that's something that can kind of get out of control very quickly, if he's not, like, pretty solid there in terms of, I would say, like I'm saying, at least reassuring people that there will be cuts if this bear run continues.
And that meeting's not till Friday, and I believe NVIDIA reports August 23rd. And I'm wondering how much that could actually affect, like, if NVIDIA is up 15% versus down 15%, just in those two scenarios, like, I wonder if it would affect his speech at all.
Oh man, I don't think it'll really affect his speech, but because he doesn't tend to react. Like, I think you would have to see it come out more in, like, the overall market than it would in just, like, that day. But I do see NVIDIA doing well as the main thing that could pull us out of this little bear run, which is, like, what I was talking about earlier, where I was like, okay, like, I want to be long two names that I think will do well if NVIDIA reports well, that are not too close to it. And obviously for, like, Square, that's just tech. And tech that's, like, kind of gotten oversold. That will kind of, like, I expect all tech, or, like, a lot of tech, to go up if NVIDIA has, like, another big report. Because a lot of this stuff, like we're talking about, is intertwined, and they could very well, like, there's so many companies that are now, either running large language models themselves, using ChatGPT to such a degree that, they're building out new applications, that's spending compute. It's going to be super, super interesting to see, because part of what NVIDIA is doing and predicting is going to be, like, where computing is going, and, like, where, like, people that order their chips, like Tesla and Meta and Amazon and places like that, how big they see the growth in, say, cloud, I would say, more importantly. So Amazon, like Google, and Microsoft are the big ones, although that's obviously Microsoft is a little more complex because of ChatGPT. But yeah, it's going to be super, super interesting to see what they guide to, because, I mean, their CEO is great. He's brilliant, and he knows how to do it. He knows how to play the game. But that's a huge binary event. Like, if they report well, I think QQQ is going to rally again. I might even, like, look to, I guess that's on, what day is that?
I believe it's the 23rd, so probably Wednesday, I think.
Yeah, I might do my midweek update then to see if I want to exit anything like as it's coming in. Um, but yeah, I just think that like if that goes well, it could rally tech. But if they guide down because of the economy, oh boy, I think that's going to be pretty severely bad for
Now, in recent weeks, you've said that like ChatGPT is actually getting stupider, quote unquote, and that I think their users went down. Could that be a warning sign for Nvidia, or not really?
Well, NVIDIA's got broad-based AI exposure. And a really cool thing, like, you know how I'm always talking about Google here? I like registered, where is it? I registered for this thing. Oh yeah, Duet AI for Workspace. Like basically I'm trying to sign up where basically they'll integrate Bard and like some other things into Docs, into writing my emails, into a few other things. So yeah, I mean, I always say it. I don't know how anyone could possibly like count Google out of AI. And like it's still trading way like it's still trading, I think, like maybe a third lower in forward PE than Microsoft, which is just crazy. Not that I'm buying any tech right now, but I would certainly buy long before. I would buy Microsoft. But yeah, like there's so much more of that coming, and like obviously so much compute is needed to run that. You know, whether it be at the cloud places or internally. Um, but yeah, that's going to be. I don't think I've ever like. I don't think. I don't think I've ever like actually remember like one company reporting that like I mean it set the whole thing off last time like but I don't really remember one that's just like so big for the market overall just because like if they do well it's going to touch everything and obviously like we're talking about it means that they're getting orders from all of these different areas of tech to scale up and if it's down it means those people are hunkering down and like the complete opposite of expansion. And if tech's not expecting expansion, then that means this credit crisis is really serious.
Hmm. Well, I know one company that's not worried about the credit crisis, I believe, which is Tesla. And this is one of the last things I want to get your thoughts on. There's a big financial Instagram account on Instagram that's called Wealth, and they posted this clip of Elon Musk saying that once Tesla full self-driving goes live, the car owners will be able to make 30,000 per year off the car. And if that's the case, I mean, why wouldn't people just be buying Teslas up and down to be able? I mean, if a car lasts 10 years, they're making money on the car no matter what, essentially.
Yeah, I'd like to dig into that. And like, is that if you never use your car? Like, how do you like, do you have to schedule it? Is it just like rolling around without you all the time? Like,
I don't know.
oh,
Elon does seem to send out the best case scenarios for when he speaks sometimes, you know.
yeah, I mean, I don't know. Like, he's more of an ideas guy. I mean, I don't know. Like I could be completely wrong about this. And he like tosses out ideas, and his ideas are always great. Some of them are even made by other people. That's how good they are. He just like someone grabs them if he throws them out into the ether. But I don't. I think he is more of a marketer than like a CFO type, and that makes total sense. And he's always going to be seeing through that lens, and nobody's really going to be mad at him if it doesn't make $30,000, right? They'll be like, oh, like he didn't know. He was just excited about it. He's the idea guy. So he's got a lot of leeway to say stuff like that and be completely wrong, in my opinion. So it probably doesn't hurt him to like toss it out and like that's always his attitude about everything. It seems like even with like the what was it, the Shiba Inu, I forgot the one that he got most involved with.
Dogecoin.
It's like, yeah, he's done it with his own company. I think he got in trouble for like leaking Tesla. I forgot what the other suit with him was for. But there was that like Shiba Inu thing too, where just like I think he's just like, well, I'll make the money. I'll like have like this marketing story, and then it doesn't matter. They can sue me if they want.
Hmm.
Like I think that's almost always his attitude. So I would take everything like if he's like, I'm gonna build this, I would be like, I totally believe you. But if he's like, I'm gonna build this in a certain amount of time and it's gonna cost this much, that's when I'm just like, all right, like we'll see. Like he
Yeah.
has delivered on some of those things, hasn't delivered on some, and I totally believe in his ability to get things done. But also playing devil's advocate there, like part of what he wants to get done is market very effectively. And like whether it's that statement or not, I don't think he thinks he can do everything that he says. That's what I would guess if you asked him.
Yeah, I agree. And we're getting to the end of our time, but we do have 5 people in here, and I know one of you is probably not subscribed, and we need one more for 200, so click that subscribe button if you like this. George, is there anything else you wanted to share? We could stay and wait for some questions. We got a couple
Yeah,
people.
we can give them until noon to ask the 5 listeners to ask questions. We were closing in on 10.
Oh, I saw 11 at one point.
Oh, really? I guess I'm not paying much attention as you. But I guess the 5 to close us out don't have anything. But yes, thanks for joining us. And hopefully we'll see you next week.
Yep, we'll post clips throughout the week. And we got one from Kyle Connell. What is ideal term of contract?
Like an options contract?
Yeah, length. It's got to be options contract.
So it depends on how much money you have to put into it, or I'll talk about it within the metrics. If you're looking at like a short-term option sentiment, social sentiment, you're planning on holding it maybe for like a week, a month, something in that range. I would do I always say like about 90 days to expiration is my sweet spot. Like I don't like to do anything really shorter than that unless I'm really, really sure about something. And even then, I almost always regret doing something a month or whatever. You just have theta decay, which is like the time value. It's just too significant. Like your margin of error is just way too small. Like I'd say if you can't buy it for at least 90 days, like I wouldn't buy it at all. That's just how I feel. But I also like doing leaps often too. And that's a totally different strategy. And the way that I look at that is it's like, oh, like I think this stock is going to grow. I like it long term. It's cheaper to own these leaps than own the stock. And I can get more exposure to it. And like leaps, a year, I would say, is what I look at. Anything more than that, you're probably overpaying for the growth. But those are the 2 different strategies. Short term, and I would look at about 90, and then about a year for a leap or like a long-term trade that kind of has high upside breakout, low downside breakout, high profitability, high growth. That's the kind of profile you're looking for there. That answer your question, Kyle?
Yeah, stay away from the daily and weekly options.
Oh yeah, like the plague. Anything less than a month, I think you're just like, I don't consider myself to be a good enough trader to play with those things. All right, it looks like we've given Kyle the answer he wants.
Yep.
All right, well, I will give 10 more seconds. Oh, what sector is the best for options too? That's a good question. I mean, I wouldn't say there's a best sector. I would say that like one of the reasons option sentiment runs lower in things like real estate and finance is like high dividend stocks. It doesn't really help to own the options because you don't get like the dividends while you're holding those long-term options for that. So like those are the ones to avoid. I mean, tech is the best thing to own options on. Like biotech, like I said, if you're feeling particularly risky. But yeah, I mean, tech is the best thing. Like tech has the highest growth rates. I mean, anything like if you're just using Prospero, like I don't think anything with less than 60 growth you even want to buy an option on because you're just not getting paid out on it. Like the risk that you're taking by having something that expires in a certain amount of time like is only worth it if that company can potentially grow a lot, if that makes sense. So even more than the sector, I would say tech is the sector that you want to do. But even more than that, I would say anything that's above 60, even above 70 is even better. Those are the ones that are potentially exciting opportunities.
Thank you for your questions, Kyle. I think they're good questions.
We'll see if he has any follow-up. And we'll give it another minute. Also a smaller market cap. I'm assuming that's market cap. And no, I wouldn't say it's better. Like I would say that it's riskier. So again, that kind of gets into like what we're talking about in terms of like different expirations, different risk profiles. Like the bigger there is, the bigger the risk, the bigger the reward. But I would say like for a lot of small cap stocks, like I don't what I said about my shorts earlier, like it is pretty risky, and I am very careful when I'm doing market caps less than $1 billion. Like for anyone that less than 5 years of investment experience, I wouldn't recommend doing options on anything less than $1 billion market cap.
I think that's great advice.
All right, I think we're good to go.
Okay. We'll be back after Jackson Hole. We're going to go to the bungalow or whatever it is.
Boondoggle.
Boondoggle.
All right, I'll see you next week.
All right, bye.